Hi, everyone. My name is Jerry Salam, the Chief Strategist at Tricio Investment Advisors, and today I'm joined by John Carvely, Tricio's Chief Economist, and we're talking about Economics for Investment Q3 2026, which was just published. Hi, John.
Hi, Jerry. How's it going?
Good, good, thank you. The first slide you see here are the highlights in this issue, and you can see it for yourself. But basically, John is writing a lot about the AI boom and what that means for the US global economy and different countries.
So we're optimistic that the AI boom will continue for a while at least, and will keep generating economic growth in the US, partly through very strong investment and partly because the stock market is pretty high levels. People are sitting on a lot of stock market wealth and they're spending that money. So that should keep the US going. The rest of the world is growing more slowly, it has various problems, but it's still benefiting to some extent from the AI boom as well. And the critical question that we were struggling with, really, as we were still finishing this report, was the war in Iran and what that means for oil prices.
This is only an 18-page report, and it covers all the major economies, major stock markets, and gives our asset allocation view as well. But on page 7, John, you have the wonderful slide of equity valuations, which are pushing up.
That is the cyclically adjusted price earnings ratio that's popularized by Robert Shiller, Nobel Prize winner, and that certainly shows it very high. But you have to remember that earnings growth has been extremely strong in the US. So that indicator looks back over 10 years. If you have a particularly strong trajectory for earnings, then the ratio can look quite high. The reason that earnings are doing so well at the moment is the huge margins that particularly the semiconductor stocks are gaining because they can sell at any price. And that will not last. So some of that earnings will come back down again. So for that reason, we still think that US valuations are high. But the outlook is good, and so chances are that the markets could still climb the wall of worry for some time.
Thank you, John. And if anybody would like to know more about our research insights and ask us for a complimentary copy of our FEQ3 2026, please email us at info@tricio-advisors.com. That's advisors with an O. And you can also ask us about our Ask a Buddy service, where we help clients manage risk and build resilient portfolios. Thanks, John.
Thanks, Jerry.